Aloha folks, thank you so much for checking out this video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to take a look at this company. It is a REIT. It is one of my favorite REITs that I personally invest on. So if this is something that you want to check out, and see if this is something for you and it fits in your portfolio, sit tight, enjoy. Again, please remember that this is not financial advice. I'm not a financial advisor. This is just me sharing. With that said, let's take a look at this company. So the company that I'm talking about, that I'm going to share with you, is Innovative Industrial Properties. The ticker symbol is IIPR. For those of you that are unfamiliar about this company, it is a REIT. It's focused on acquisition, ownership, and management of properties to facilitate MJ operations. So if you look at their website and you look at their portfolio, you can see their portfolio is comprised of specialized real estate, 100% leased to state licensed operators. So they have a lot of places from Arizona, numerous places in California, some in Colorado, Florida. You got Illinois, Maryland, Massachusetts, Michigan, and Nevada, New Jersey, North Dakota, Ohio, Pennsylvania. So a lot of places where they house MJ. Now, if we go over to some of the presentation, you can see their business model and benefits. Work closely with quality state licensed operators, execute sale leasebacks and fund improvements for cultivation, processing, and retail properties, to provide non-dilutive capital and to facilitate our tenants' growth plan. So you can look at the structure: long-term growth, January 15th, 20 lease. Capital leases are 100% triple net. So one of the things I also like about this one is, if you look down here, you can see the number of tenants per year. So from 2016, there was only one, to which is today it is 28. So number of stays per year in 2016 was only one, today is 19. And then you got your number of properties, you got 109. So you can see the consistent growth of this company, which is, in my opinion, great. Now if we look down to next, the portfolio overview, you can see the state, many states with it. A total of, so they got Florida with 7%, you got California 11%, Pennsylvania 13%. So very structured, very spread out. It's not just in one side of the states, is pretty much in different areas. Now if we go further to some of the information, so if we go here, rapidly growing industry, large market and support, wide variety of qualified medical conditions. So these are just some of the overview that makes this thing interesting, this company interesting. Now if we go further to some of the articles that I found is in the Monthly Fool. This was in July 19, 2022. Is Innovative Industrial Properties screaming a buy after its big sell-off. So if you get a chance, go read a little bit about it. The stock has fallen like the rest of them to 58% per year. Now they agree that this is also they feel that it is a buy, which in my opinion it is too. So if you read a little bit about it, you get some more information of it. They talked about how the leases, the real estate also approach other cannabis operations by potentially leasing some of the King's Garden properties. And then they talked about how Every REIT, regardless of industry, does face a possibility that a tenant can default, but I don't think that IIPR board poses a risk because Kings Gardens has run into problems. So I want you to read about a little bit about this and get an idea on some of the thoughts and what they feel about it. In my opinion, I really like this company. Now moving along to Simply Safe Dividend, based on their safety score, they rated as 50, which is borderline safe. The dividend yield of this is 7.49. At the time of this video, the price is at $93.65. Market cap is about 2.6 billion, which is considered a mid cap. Now, if we look down through some of the key metrics, you can see payout ratio, which is 84, which is high for industrial REITs. Looking down to the dividend growth, you can see for the full year 28%, which is very fast. You can see from 2016 to 2021, you can see that rapid, that accelerated growth going up. So 4 years consecutive increases, 4 years without a reduction. Payout details, you can see quarterly you get paid in January, April, July, and October. Annual payouts about $7 per share, which the ex-dividend date is June 29, which has passed. And then you get your quarterly of $1.75, which equals to about $7 per share. Now looking down through some of the information, you can see based on Simply Safe Dividend, they may be undervalued. Looking at the more financials of it, you can see some of the total sales. As you can see, it's going up. And then return on equity, as you can see right here, last 12 months 8%. Return on investment capital last 12 months is 7%. Now if we go over to Yahoo Finance, so you can see from the chart, the blue line is the S&P 500, and then the other one is the innovative properties. You can see, like everything else, is going down. Great, in my opinion, that's a great opportunity to buy. Now if we go to bar chart, you can see based on the chart below you, so you have the 20-day moving average, which is on the red, and then you have your 50-day, which is the blue, and then I also put a 200 moving average, which is the black over here. So you can see, we'll see how it goes, but the volume has been, you can see it's been a sell-off here. It was a major sell-off in here. There is a MACD crossover over here, so we'll see whether it continues to go this way or it's just going to go up. So that's something to want to keep an eye on. The Rizzo, you can see it is going down where I like it to be, which is in the 0.8 and then the 0.2. So in between here is what I like. But you'll see how it goes. Maybe it'll go up this way at some point, or it'll continue to go down. Dollar cost averaging is probably what I'm going to do to get more of this share. Now looking a little bit more into it, bar chart technical opinion recommends a strong sell, 100% sell. Now looking down to current rating, which is a strong buy. You got 5 strong buy and 1 hold, and then you got your key turning points over here. The resistance 96.76, and then you got your second resistance, and your support level is in 91, 80. The second one is 89, and then your third support level is at 86. Now if we go to Webull, based on their analysis, they rated, there's 8 of them, they're rated as a buy. You got strong buy 12%, buy 50%, and then you got your hold, which is 35%. Now if you look at the price tag, the high is at 248, the average is 158, and then you got your 100, which is low. And then your institutional, you can see 162 have increased, 45 is new, 133 have decreased, and then you got your 58, which is sold out. Now if we go to stock Rover, you can see the risk and return And then I like to look at the versus the industry. So you got the industry and you got S&P 500. The 5-year return, their calculations about 520. And then you look at your dividends in here, you can see a little bit more here. So for those of you that are wondering, so you'll get paid on the 12/18, the 9/27, 6/28, and then 3/28. So you can see it's towards the end of the months. Yeah. Now moving along to simply Wall Street, based on their share price and fair value, they feel that the fair value of this is 472. Currently it's at 93, so they feel like it's 80% undervalued. Looking over the company overview, you can see some of the key points. Trading's 80% below estimated fair value. Earnings are forecast to grow 20% per year. Earnings have grown 67% per year over the last 5 years. So some of the risk: unstable dividend track record, shareholders have been diluted. So it's only been 4 years they've been consistent. So that's just some of the risk. So that's it. All right, man. Thank you so much. Hope you like this video. If you do, please give it a thumbs up. As always, please remember, this is not financial advice. Also, if you're interested in other types of videos, other types of companies, check out the other videos that I have. With that said, man, thank you so much, man. I really appreciate you guys. Stay cool, keep investing, and I'll catch you guys in the next video, right? Take care. Aloha.